Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, July 11th, 2025. S&P 500 currently sitting at 6251. I'm David Zarling. I'm here with Ian McMillan. We took a break last week from the podcast to celebrate Independence Day. Did you have a good 4th?
An amazing 4th of July. Very, very fun. How about you?
It was great. Did some time with family at the lake. Can't beat it. Super fun. Nope. A little bit of water, a little bit of boating.
That's the life right there.
It is.
Especially when you're with family.
Oh, 100%. That's what makes it great. So we've got 2 weeks of information that we could cover. I think interesting to note that the market did pretty well last week for the 4th, going into the 4th. You know, half day July 3rd, market closed July 4th, appropriately so. I think we should always do July 4th on a Friday. Can you make that happen?
That would be sweet. Yeah, so 2 weeks ago, cast would have been late June 27th.
Yep.
And so we were just breaking to all-time highs that day. I think and the NASDAQ had gotten there a little bit before that, but S&P had gotten to new all-time highs. And 2 weeks later, that trend has continued.
Yeah, not a bad thing. And I think it makes me think about the phrase all-time highs, right? Like when you hear that, I'm sure there's many listeners or investors who would be like, oh man, market's too high. All-time high, market's too high. That's a bad time to buy. What do you think about that? Bad time to buy new all-time highs?
No, I don't agree with that. Say it's confirmation of the uptrend a lot of technicians would argue new trends don't start till you get to new highs, which I can somewhat get behind that. I think that's hard off of a V bottom, but like consolidation.
Yep.
Like really 2000 S&P didn't get to new highs after 2000 until 2016, 2013, somewhere in there, 2013.
2013.
So there's an argument, right, that the new bull market, we actually didn't get a new bull market until 2013. And I mean, from a long-term perspective, I can buy into that. But I think also, right, so we can extrapolate that down shorter term. And I think it fits.
For
new
sure.
Highs usually beget more new highs. This is how trend works. This is how the Dow has gone from 40 to 43,000 over the last 120 years.
Well, and the data supports buying new all-time highs. I know Peter Maluk, hopefully I'm saying his last name correctly, that since 1989, money invested in the S&P 500 when the market is at all-time high actually outperforms money invested on any other given day. So like 1 year returns, if you bought at a new all-time high, 13.5% versus any other time 11.8%. 3 year returns, 44 versus 39. 5 year returns, 82 versus 74. So the data,
you just never moved higher, then there'd be no point to invest.
Right. And what's wrong with overwhelming demand? That they're willing to buy stocks at prices they haven't before.
I think you've got to truly mentally buy into that. I do think you've got to have a pretty solid technical analysis bone in your body.
Yeah.
I do understand why the average human being hears the word all-time highs. Oh my gosh, this has never been higher. Well, I better at least take some profits, right?
Right.
But that's you're thinking about it all wrong. That's not how I would phrase it. But on the other hand, you know, if you and I didn't have a background in doing this for a living, would I view it the same way? Maybe. If I was in a completely different, if I was I don't know, a nurse or a doctor or a teacher, would the phrase all-time highs kind of be alarming? I mean, I get it.
Yeah, I get why there might be the psychology of
Mm-hmm.
uneducated analysis of the market, but anytime that buyers are willing to buy stocks at prices they haven't before, well, markets are a weighing machine, a future discounting mechanism. It's looking 6 to 18 months in the future. And right now, demand indicates that they like stocks. And then you look underneath the surface, or maybe even across the surface, and you look at things like crypto.
Yes.
You want to talk about that? Should we pause there and talk about what we're seeing in
Crypto, I
crypto?
think we may finally have gotten the breakout for Bitcoin. Kind of been up here in this 107, 108. I think it got up to 110-ish a couple times. But we're now sitting at 117. Really a nice consolidation when you zoom out and look at the chart. Very, very healthy. We had a big run from, April lows.
Mm-hmm.
Bottomed around the same time stocks did. Early April 7th ish, 75, straight back to 110, consolidated sideways for like 2 months and a little over 2 months. No, not even. 7 weeks. So pretty nice little consolidation. And as one would expect, moving in the direction of the previous trend.
Yeah.
How about that?
Yeah. Consolidation, breaking out in the direction of the primary trend. Very technical thing for the Bitcoin market to do. I mean, sitting below 108 since December of 2024. And now we're sitting at 117. Uptrend confirmed for Bitcoin. Don't know how to make it any more simple than that. And you're seeing stocks inch higher. You talked about that. Then we have some metals out there.
Silver, I think silver looks good. Also,
silver.
a consolidation a little bit shorter. Really, probably just like a month, but big move. Silver breaking out of that consolidation today looks very good.
Palladium.
It's palladium.
Not something we talk about too often, but we have the last few episodes.
Big move. Yeah.
And here we're on the verge of breaking out of a base that goes back to 2023. So we'll see what that means. When we look broadly, you look at international stocks, kind of cooling off on a broad relative basis, looking at something like VEU, which is all international equities versus S&P, pulling back.
Yeah, they had that big relative move, Q1-ish. And there's definitely some great charts, definitely some great individual country charts, and still are, but broadly hard to just like buy EFA or a VEU or an EEM. Just didn't quite hit it. Came up to that rate of trend and got rejected, like we've done so many times over, decade plus, 15 years.
Mm-hmm.
And doesn't mean it's the end, right? We'd probably have to get to new relative lows to say that, okay, we got some type of, but it will not be happening right now, which is interesting. I would say, so we just got done talking about precious metals and crypto. Crypto wasn't really around in this previous period where I'll make my point. But so precious metals, foreign stocks, right? We've talked about that on the podcast, very 2008 to 2007-ish. And so the precious metals have kept going. But yeah, to see foreign stocks stall out here is interesting.
Yeah.
Not that every cycle has to be the exact same, but something I thought might happen. If you had told me that silver and gold were still this strong, I would have said, okay, I assume EFA has been holding up pretty well there. And it really hasn't.
Agreed.
On a relative basis.
Definitely, still in the new, all-time highs camp.
Yes.
And that's a good thing.
And it got there very quickly. EFA was at new all-time highs by May 5th. And we just said earlier in the podcast, S&P didn't get there till what? 27th, so almost 8 weeks ahead. So there's still that backdrop that, hey, foreign stocks were the first to get to new all-time highs, so you can't really count them out yet. Maybe they just need some time to consolidate up here. But yeah, no confirmation yet that we want to be heavily involved in foreign equities, right? And that's going to be tough. I've talked growth value,
Right.
is back in favor of growth, so that's going to favor U.S. indices and the Nasdaq and S&P, and not things like the DAX and the CAC 40.
Yeah, it's just institutional makeup, right? I mean, you look at SPY-G versus SPY-V, growth versus value, going out at highs, new all-time highs. You look at RPG versus RPV, not necessarily the same look, but confirms that growth is in favor. And you're right, the way these indices are made up, that's going to favor a lot of these U.S. indices versus international. International could still participate. And then you add in one of your favorite charts, high beta versus low vol.
Low vol. I mean, confirming all of it, right? We talked about checking the boxes.
Yep.
A couple weeks ago, and that was on there, and it has just continued to move higher.
And then you look underneath the surface and you say, wow, look at the strength out of tech, U.S. tech. And then you look underneath that surface and semiconductors are doing well. AI, financial tech, quantum computing, metaverse. Like these are risk on.
Yes,
areas.
They are.
And you follow that up with things like Bitcoin and Ripple.
Even Ethereum's moving higher.
Right.
We could have another alt season underway.
We could. And
That
triple
is
C,
not risk off. That's not risk off.
It's not. And triple C credit spreads continue to cool, confirming not a lot of liquidity stress out there. So continuing to stack information that risk on behavior is here and remains. And we talked a couple episodes ago about seasonality from mid-June to mid-July being pretty good. It wouldn't be surprising to consolidate here from a seasonal perspective. When you look at mid-July, end of July into like September, it would not be surprising to see a little bit increased volatility, some consolidation of this move, because it is one of the faster moves from the low in April to where we are now.
It was quick, yeah.
It's one of the, depending on what indice you're looking at, I believe S&P 500 speaking, the fastest recovery ever recorded of the indice. So it wouldn't be a bad thing if stocks consolidated here, hold the all-time highs, or maybe even like undercut them, consolidate around the previous highs, frustrate the herd. That would not be surprising. So tech is working, Bitcoin, gold, silver, palladium, broadly speaking, international cooling off, high beta doing great versus low vol. What are some sectors that you look at and it's just like hands off, right? Not all sectors are the same.
For sure, still healthcare. Staples you can put in there. Although we like to see staples weak on a relative basis.
Right. Yeah, but healthcare is pretty abysmal. I mean, when you look across the spectrum there, especially among the top 10 stocks in that sector, it is not a pretty sight.
It's not. Another one that now, and it doesn't look bad, but one I'm waiting on to just do something is banks. I want banks to do something. Not that they have, right? I mean, we just spent time talking about confirmation and growth. So the big banks are good. Big banks look fine. JP Morgan actually finally, after 37 years, my entire life, broke out of this relative base.
Yeah. Going
So
back.
are we going to see, now it's got to stick. We'll see. We will see. But at least a bright spot for JP Morgan. Hopefully that follows through to the regionals. The big banks they seem fine.
Well, in your top performing sectors for the year, year to date, industrials, tech, utilities, that's an interesting one. Communication services.
Services, yep.
I mean, that's not exactly
I get video games falls under that, I think. So I'm sure that helps. I mean, plus you got like 2 Mag 7 stocks.
Mhm. Well, what I do find interesting that's developing today for communication services is you look at XLC versus S&P.
Been waiting on it. Are we finally getting a breakout?
Opposite. So this
Bummer.
consolidation that's going on since February. Now, the day's not over, the week's not over. We still have quite a few hours here before close for Friday, July 11th. And it could reclaim and hold that lower boundary that's developed since the beginning of February. So it's a nice consolidation, but if it breaks to the downside, that might be information worth paying attention to, that maybe comm services are out of favor for the summer. We'll see.
Silver and gold improving. Might have a fail breakdown there.
Mm-hmm.
Yeah, maybe it's interesting. It's interesting, right? Because then we just talked about growth. So I would have expected, if you told me XLC was finally getting out of the consolidation, I would have assumed it was to the upside.
Right.
That's why you take each chart on its own merit.
For sure. Well, and you've got the relationship of tech versus comm services. You look at XLK versus XLC, and we're back to an important area of polarity that goes back to summer of 2022. So we'll see if that's some type of false breakdown, or maybe this is an area where it's a false breakdown of XLC versus S&P. Only time will tell. That's why you look at charts, take each chart on its own merit, like you said. And I think it's appropriate to highlight the support of this podcast at this time, the Adaptive Select ETF, which is listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. And what I find interesting about that particular product is its universe is the Russell 1000. And we just had a reconstitution here, didn't we?
Just had a reconstitution
of the Russell 1000.
Oh, yeah. The Russell 1000, all the Russell indices always happens June, halfway through the year. Although moving to 2 reconstitutions next year.
Yeah.
Starting in 2026.
Changing their methodology, but added 36 or 37 stocks here, depending on where you look. Not all of them are graduates from the Russell 2000. Some of them are straight up ads. Some of them are IPOs. But, it's an important thing to pay attention to when they add or subtract, graduate or demote, using their terms, things like in the Russell 1000, Russell 2000, even S&P 500, important to pay attention.
Can you graduate from the Russell 1000?
Yeah, you can graduate, go to S&P 500.
Is that...
Well, technically you could be in both, right? You could be in the Russell 1000 and S&P. So I don't know if it'd be like...
I like the Russell 1000. I like it. It's pretty straightforward.
Mm-hmm. But, we saw things like Rocket Lab, Tapestry, Dutch Bros, Toast, Rubric, MSTR, MicroStrategies. Interesting. There's a lot. Dell, there's an old name. I would have lost that bet, not knowing each stock by heart that's in the Russell 1000, that Dell wasn't already in there.
Yeah.
Wouldn't have guessed that. But an exciting new universe and methodology that they're going to a twice a year reconstitution rather than once a year. I think that's pretty cool. What else, Ian? What else would you like to cover for our listeners worth highlighting for market developments over the past 2 weeks?
I don't know. I mean, I think the boxes remain checked, and I would assume, barring some type of outperformance from the Russell 2000, I assume breadth probably starts to wane off a little bit, even if the market goes higher. So, take that as where you see it. I think we've reached some intermediate term highs in participation. Kind of when you get up above the 80% of stocks above a 200 day.
Mm-hmm.
Now it's a great breadth, thrusty kind of confirmation. And the markets do typically go higher, but you definitely see that number start to dwindle a little bit.
Yeah, which would match the seasonal period that we're heading into mid July through September. You know, indices finally got back to being, positive on the year, new highs. Would not surprise me one bit. What you were just talking about, for breath to cool off, for us to have a consolidation in a choppy summer, that would not be surprising by any means. So with that, we appreciate everybody listening. Ian, great to be back on here with you after a week off. And
Yeah,
for those listening, share us with your family and friends. Give us a high ranking on your platform of choice. That means a lot to us. And we will do it again next week.
have a great weekend, everyone.